Are you thinking about buying a franchise but don't want to start from scratch? Franchise resales can seem like the perfect solution. But are they really? While some franchise resales offer a turnkey business opportunity, finding the right one can be a challenge. We're taking a deep dive into the franchise resale world, exploring the pros and cons and whether this path of ownership is right for you. So, what exactly is a franchise resale? A franchise resale happens when an existing franchisee decides to sell their business. Unlike starting a new franchise location or unit from the ground up, buying a resale means acquiring an already operational business. This can include a loyal customer base, trained staff, and established cash flow. On the surface, it sounds like an ideal opportunity, but let's dig deeper to see if it's the right move for you. So let's start with the advantages of buying a franchise resale. First off, you have pre-existing customer base. So one of the biggest benefits is inheriting an existing customer base. So instead of spending months or even years in the beginning building up your clientele, you can hit the ground running with a business that's already generating sales. This is a huge plus. Next up is trained staff and operations. So a resale also means that you're likely to inherit trained staff, established operations, and a business with proven systems in place. So you're not starting from scratch. There's already a team that knows the ropes. Immediate cash flow. So because the business is already operational, you could see cash flow right away, which is much faster than launching a new business and waiting for it to grow. Another advantage is potentially lower risk. So there's also a sense of reduced risk as you can assess the franchise's historical performance. So unlike a new location, you'll have access to financial records to help determine if the business is truly profitable before you decide to invest, which is another big advantage. Of course, buying a franchise resale isn't without its challenges. So here are some potential downsides you should consider before pulling the trigger on a franchise resale. First off is, why is it for sale? So ask yourself, why is the franchisee selling the business? Is it due to retirement, or are there underlying issues like declining sales or increased competition that you should know about? You need to dig deep into the reasons behind the sale before signing on the dotted line. Next is, how did this opportunity end up in front of me? You need to ask yourself, if this franchise is a good opportunity, how is it available to me? So why didn't another franchisee of the system purchase the franchise, or why didn't a family member, son or daughter of the franchise owner, purchase the franchise? And also, if it is performing so well, why don't they just hire a manager to run it day to day? These are all important questions that you should consider upfront before you invest in a franchise resale. Next up is outdated or underperforming business. Some franchise resales may involve older, underperforming locations. These businesses may require a substantial investment to modernize or reinvigorate the brand, meaning more money out of pocket before you actually see any returns, which negates a big advantage of doing a franchise resale. Another issue to consider is difficult financial assessment. While you do get access to the business's financial history, or at least you should, it can be tricky to assess the future potential. So the franchise may have been run poorly, leading to inflated expenses or declining sales trends that might take significant time and effort to reverse. So you must consider this aspect as well. Next up is higher upfront costs, potentially. So franchise resales can also come with a higher upfront cost compared to opening a new location from scratch. So since you're buying an existing operational business, you're paying for the goodwill, the assets, the potential of the business, which might be priced at a premium, especially if the business is profitable and cash flow positive. So you're paying a premium for this, which can be more expensive than starting with a new franchise and new location. The next segment is, why is it hard to find a good franchise resale opportunity? So finding a great franchise resale isn't easy, and here's why. First off, you have limited supply. Good resale opportunities are hard to come by. Successful franchisees typically don't want to sell their business unless they're retiring or moving on to something new if the business is performing well. So this limited supply can make it tough to find well-performing businesses for sale. A lot of times the businesses for sale are the lemons, the ones that aren't doing too well. Next up is high demand. So when a good franchise resale does hit the market, it's likely to attract a lot of attention, driving up the price and competition for the resale, and this can make it difficult for first-time buyers to secure the deal. Next is, not all listings are profitable. So remember, not every listing is a gold mine. Many franchise resales are businesses that are struggling or are not performing as well as expected. The challenge is sorting through all the options and finding one that aligns with your financial goals and your risk tolerance. Let's look at the economics of franchise resales. So what are the economics of franchise resales? The purchase price for a franchise resale can vary significantly depending on factors like brand, location, and current profitability. So you might pay anywhere from $100,000 to well north of $1 million for a franchise resale, depending on the size, typically the EBITDA, like the size of the business, and the market. So the sales price is typically a multiple of the seller's discretionary earnings, which is SDE. Basically, the earnings of the business for the owner multiplied by a multiple that is typically anywhere from 3 to 6 times that figure. So on the plus side, a well-performing resale can generate immediate cash flow, giving you a faster return on investment compared to starting a new franchise. However, the resale price often reflects this, meaning you might pay a premium for the convenience of taking over an operational business that's cash flow positive. Additionally, you'll need to factor in costs for upgrades, equipment, or marketing to get the business to your desired performance level. Pros and cons. What are the overall pros and cons of buying a franchise resale? For the pros, immediate cash flow with an existing customer base, trained staff, and established operations already in place. 3, lower risk compared to starting a new franchise due to the access to historical financial data. Cons. Potentially higher upfront costs because you're paying a premium for the cash flow. The franchise might be underperforming or outdated. Limited availability of well-performing franchise resales. It could be hard to find ones that are cash flow positive that are available to you. And then lastly, it's difficult to assess future growth or necessary improvements before you actually purchase the franchise and see exactly what you're getting. In summary, while franchise resales can offer an easier path to business ownership, they come with challenges, especially when it comes to finding the right opportunity. If you're ready to explore franchise resales or franchises in general, come to Vetted Biz for more in-depth insights and listings. Thanks again for watching and hope to see you again soon. Take care.